Good morning. It is June the 29th, 2016, and we're one day away from the end of the month, end of the quarter, and that tends to support markets. There's no incentive for large money managers, institutional money managers, to hit the sell buttons across the board. That tends to hold markets in a range. Zero interest rate policies. I put a chart up. Go back and look at it since negative interest rates were started by Japan, what it's done to treasuries and bonds around the globe. They're outperforming the stock market by quite a bit, and there's probably two reasons for that. Global economic weakening, the numbers are going down, and the other one is central banks have put a floor on interest rates. While treasuries, bonds, etc. may sell, they can't go too far because of interest rates at 0 or less in Europe and Japan, and at 0.5% in the United States. So that's where we find ourselves. So the extra juice, why are we pointing up? Why are we pointing higher? Because most people believe that the United States, if not in a recession, is very close to being in one. And the feeling, I mean, when you look at Europe's growth numbers, they aren't anything to brag about. Japan's certainly aren't, and China's economy is slowing down too. So that's where we find ourselves today. I think it boils down to whether the E-mini rallies or not, and by how far continues to rally. At 2050 area, that's a pretty round number. If that holds, then we can get some lift in treasuries too. So not a lot of news to deal with today. We have personal income up 0.3. So income's up 0.3. Spending's up 0.4. That spending number could come in less than forecast, and then core is up 0.2. Pending home sales minus 1%. That's probably spot on. And then we have the EIA crude number, looking for a draw of minus 2.3. And last night, I believe the APIs drew 3.5 million barrels, something like that, so that would be in line with that. The focus will be personal spending. I don't think anybody in the direction of the E-mini, in my opinion. So where are we sellers? 7 to 11, sell 1. 15 to 19, sell 2. Just that's where resistance is. Like to get it done at 7.5 or better. Get above this high volume number right there. On the buy side, it was a B yesterday. It is held. Bottom of values, so 31s to 3, allow them to get stops below 133 even by 1, and then 25 to 29 by 2. I'm looking for a tight trading range day when you get right down to it. I hope everybody's having fun. It's summer. Isn't it just nice to go outside and sweat? I mean, it's kind of different from in the winter where you have to go outside and bundle up. I mean, it is a part of the cycle, and it should be enjoyed. I'm not saying get out and run a marathon or anything, but okay. This is interesting. 12 to 16 is where R1 is. First sells 19 to 23. It's leaning against resistance. Then 31 to 03. We'll open it up a little bit if we start to go up. But again, I just think you're not going to have a concentrated selling in the E-mini today, just because of end of the month, end of the quarter, half of a year. Buy 1, 25 to 29. Buy 2, 13 to 17. The E-mini goes nuts today, and short covering rallies are 40 to 70 points back in the old days, and they used to last a day and a half. It's over in the blink of an eye now, so it happens much faster than that. But they're swift and they're violent, and the markets move higher than what you would think logic would say they should move or could move, but they do. So what we experience now are short covering rallies of the next day or early in the AM session of 30 to 40 points. Gold was holding its own. I think gold again is in the same situation it has been, and there is so much chaos in the world and so much stuff that people don't like going on that it's pretty easy to own gold. And we'll split London out. See London capped in the 25 area. See Globex found buyers at 15 to 17. We are pointed lower, so maybe a little lower this morning with some help from the E-mini. 15 to 17 buy one. Basically a 10 to 15 buy. 10 to 12 buy two. 24.26 sell one. 29.31 sell two. That allows them to get stops above here. Puts that high volume number, that attractor, in play. It's really interesting with Henry. They are starting to shoot off fireworks, and he just wants no part of being out of doors, like nail guns and fireworks nail him. But he can sit on the deck in the middle of a thunderstorm, and we've had lightning strikes within a half a mile that bounce the furniture, and he does not bat an eye. And I wonder how or why he draws the distinction. Most dogs that don't like fireworks don't care for thunder. That thunder and lightning, as Peter would say. But for some reason it does not bother him. But I have to drag him on his walks, and Henry's, whose main mission in life is marking every spot that any other dog is taking a whiz on. Last night we walked about a mile and a half, and he found one spot to mark, which is totally out of character. And I had to drag him out to the end, and then when we turned around and headed for home, he was dragging me home. So it's funny how dogs order and sort the world. Okay, 30 to 40, where we are right now. Sell one. We'll make 65, 75, sell two on the euro. On the buy side, 111 even, buy one. 1075, buy two. Okay, the API numbers were favorable last night, and crude rallied back. Got a little help from the stock markets too. We've got this break in the market at 48.50, so that's where we find ourselves. So 48.50 to 75. Sell one. 49 even, 49 and a quarter, sell two. On the buy side, they're expecting a draw on the EIAs, so probably some pretty good support at 48, so 47.75, 48 buy one. And then 47 and a quarter, 47.50 buy two. Now, in my experience, many years of watching the EIAs and the APIs, it's probably the easiest number to miss from a forecasting standpoint. And it's, while bets are made on those estimates, not significant or bet the farm type bets are made. And I'm always amazed at how the market reacts when the numbers are missed, because I mean, we can get some really, really explosive moves, and the numbers themselves pretty insignificant. Think about it. Okay, the E-mini were higher, and it continued. The rally continued overnight, and we've got this area right over here. We've got this K high at 44. We've got a J high at 44 and a half. We got a G high at 49. So 45 to 50 is really, really pretty good resistance. So my guess is that we are going to get stops above the overnight session high. So 44, 49, sell one. Like to get it done close to 50. If it does set up, the market is pointed up. The first trade should be from the long side, but if we fail to take out and hold 2050, tomorrow is when the quarter's over. They could have some little quick sell-off and then set it up for a rally tomorrow and Friday into the 4-day weekend. That is the tendency. The second level that we're selling is 55 to 60, and that's picking up this value area high. That top up there is 65, so it's as high as we got in the day session, and we rejected prices over 57. So 57 to 64 is where we have rejected prices, and that's probably the best resistance. We're already through this high volume area. We're already through the mode right here, so 57.64. The market did reject those prices, so that's where we stand right now. On the buy side, the breakout came from 36 or 41, so 35, 37. It's very, very bold, very, very aggressive, but they make us pay up to get in, so that's buy one, and then we'll make 26 to 31 buy two. Short covering rallies are violent. There's not a lot of, I mean, right now everybody's saying, well, the reason we're higher is because central banks are going to intervene. They're not going to let the stock market sell buy stocks. Brexit's not as bad as it seems. The selling off of Brexit is behind us. That was a surprise. But what has really changed? Not much. Central banks are there to buy anything and everything when they have to. And that's what's driving the markets right now. Okay, it's going to take a bit to get everything up and done. I'm running a little slow, a little late this morning. I'll get busy on that, and I will be back with you as soon as possible.